nimetoka job kama nimechelewa.
No worries, we have not started. Tunataka kuanza saa hii.
Okay.
Let me share my screen. Should I zoom or you cannot see it?
I think it's clear.
It's clear.
It's
Okay.
visible. Yeah.
Fine. So last time we discussed the references that we are going to be using, and yeah, there's a sheet called references. So anyway, as we continue, maybe if you need to refer to understand maybe what the name of the or the letter that we use. As I said last time, these are not standardized namings. It's just that each audit firm may choose to use various references. So for our case, we are going to be using these references. So the first step, once we have the draft accounts, the next step is usually to prepare an audit. So this audit file is the one that you are going to be using for your audit purposes to document everything you find out during your audit. And it's also the one that can be referenced later if there's any issue that comes up related to the audit that you just did. So the first thing is you can see added a letter A here. So these are the draft accounts. So for example, the draft accounts, we give them a reference of like A3. Then the previous, the audited previous audited accounts, I think we give it A1, something like A1 or A2. Then at your balance, we give it an A4. So such things, these are just, but anyway, let's just continue with the other, with the items now. So for fixed assets, we are going to use F. So the first is the first schedule, which is going to have F1. F1, if for example, you have now a physical file, you would go to N9, and then you select this section that relates to Zoom. Yeah, so this section here, this part for 2022, from cost up to net book value. So you would select this section. This will be your F1, okay? You select this section and then you print it. Then you give it an index or a reference of F1. I can just put an F1 here. And note that in audit, although again, probably you may find these being done differently in various audit firms, we used to use a red pen for indexing such things. So like, for example, this becomes now your F1, okay? Then once you have this F1, you have now additional references. For example, now you are going to be giving references for the various items that you want to audit for this case, which is the property, plant, and equipment. So some of the audit that you're going to be conducting here relates to the additions that were done during the year. So this one, you can give it a reference of like F2, for example. And this F2 now relates to the motor vehicles, okay? Then from there, let me just create a new sheet. I think it's easier that way for understanding. So this is going to be F1. Okay, so this becomes your F1, okay? And this is what you would have printed, and then you print this, and then you put in your file, giving it a reference of F1. Then, as I said, the draft accounts, we give them A3, okay? So what you would have done, after printing now the draft accounts, you take the balance sheet item and you go to where PPE is represented, which is this one. Then you now indicate, because you are doing, remember you are doing now, you are extracting this from, or you are doing a file, and part of the file is going to be the draft accounts. So for this, when you put the A3 on top of your file, now you want to identify where can I get the narration or the information about the PPE, okay, in my file. So this is going to come from F1, okay. Then now when I go back to F1, I have also to cross-reference this. So the total amount 3.6, that's 3.5, sorry. Okay, I can see there are some items that were lost here. So let me just this directly to from my notes, which is this. Okay, so then in your file now, you are supposed to cross-reference, okay? So this one is now going to go to A3. Of course, you would write it using a pen because most of these things are done manually. So you write with a pen and then you circle it, a red pen that is. So you are cross-referencing now. This one, this figure is transferred to your A3, which are the draft accounts. And then now, if you are in A3, you can reference to get the value of this figure, which is now given under F1. Okay. Then from there, now as I said, for PPE, mostly we do the audit for the additions that were done during the year. So here you say, I give, for example, motor vehicles during the year additions, you give them an index of F2, or a reference of F2. Then for the computer, you give F3. And then for furniture, you give them F4. Now, in this case, this is usually, okay, these are the list of transactions. So additions during the year, you cannot extract this. If, for example, you're using a software, an accounting software, then you can be able to extract a ledger, which shows you how this 4.3 came up, 4.2 came about. So you may find, for example, despite the fact that this was a motor vehicle, the way they treated this in the account is that payments were done maybe partially. Like, for example, there was a payment of 1 million, then 2 million. So it might have been spread through probably a couple of months or a couple of days. Then that ledger, which now totals to 4.2, is now the one that you are going to attach and give it the index of F2, because remember you are referencing. Then you go to that ledger, as I said, the number I linked here, I referenced here, this figure, I sent it to A3. Now, when you do the ledger, you print that ledger and attach it and give it an index of F2, the total figure of 4.2, you are now going to again cross-reference it or index it as transfer this figure to F1, okay? So that they are interlinked that way. Then now, because this is a motor vehicle, you expect things like a sale agreement, for example. There might be an invoice, maybe a logbook copy. So those ones you can give the index of F2 slash maybe like /1, another document /2, another document /3. Then now the payments or the transactions there, remember when you are an auditor, you have to leave what we call an audit trail, meaning you did some audit, okay? So how do you leave an audit trail? By indexing, by for example, if assuming you have this ledger. So if you are able to track this to a logbook, the details that are given for this vehicle to a logbook, then in your ledger, the one that totals to 4.2, you can write L, okay? L symbolizes, and then you usually have a key. So for example, if you write L in your ledger, then down there you should have a key, something we call like a key, okay? Then a key should indicate if another auditor comes and they find that you have indicated L. L mean. So here you can say logbook, seen and verified. Okay. All right. So anyone who comes and finds an L, then there is a key here that says if you see L, this means I was able to get the logbook and it was verified. In other words, it was registered in the name of the client that I'm currently auditing. Okay. Then maybe say you also got an invoice. So then you say I. And what does I symbolize? Invoice, seen, and verified, or what, just some narration to say that you are able to verify all the information that has been provided in terms of there were support documents, the logbook was there, the invoice was there, the sale agreement. Maybe the sale agreement you can use SA as the key as well. So, but remember that I wrote them here, but I said these are going to be in the ledger, because the ledger is the one that you are going to be, we call it vouching. Vouching is simply identifying. You pick an item and then you go look for a support document. Do you have any document that can support this? We usually call it vouching. Okay, so the key that I have in these two keys, these are going to be in your transaction ledger. Okay, so for example, you got a logbook, you write L, you got an invoice, you write I, and then down there, after your ledger totals, you can have a key that illustrates. So what does L mean and what does I mean? Okay, then from there, maybe you do the same for computers, 200,000. So maybe this was not one computer, but like 4 computers. 4 computers, then you ask, what is the document that can support this purchase was a viable purchase? Then maybe they give you an invoice or a receipt or a cash sale or an ETR receipt, whatever they give you. Then you compare that with the transactions that you have. Are they matching? If they are matching, then you can indicate either I, as I said, or maybe CS. CS is a cash sale, or maybe a receipt. You can use R for that. But always remember, auditing, you must make sure that for every ledger that you audit, you must have a key. Because remember, you may not be there for maybe during the next year audit, maybe you are assigned to a different client. But the person now who takes over, and even for your case, when you take over another client, you need to be able to follow the trail. What was done in the previous year, in case any questions come up. Now, if there's no key indicating what these references mean, then you may not necessarily understand